Islands, Light FM. Modern English is there. I am Morning Dave. At least I think I am. I'm confused at times these days. It's 8:42 now, 18 before 9.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
It is time to check in and see what your particular situation is with the month on Wall Street with the facilities of Phillip Statler from Statler Financial Services in downtown Sebring on the phone. Phillip, good morning. How's your life this morning?
Hey, good morning. Hey, doing well today. The week's almost over, halfway through the month of June. Just hard to believe as markets have been doing okay, except for the last couple of days, Dave. We've given back some, and it doesn't look like that's going to stop today either.
Unfortunately. Setting the table yesterday, it was almost flat on the blue chip indexes. The Dow ended up falling $1.10. Standard & Poor's was down something measurable, down 16.5. NASDAQ lost 0.5%, down 99 yesterday. I'm kind of thinking two things, and you and I were noodling through two different causes. Number one, the price of oil was way up yesterday, and that's enough to scare virtually any publicly traded stock. But in the face of President Trump and his Treasury Secretary talking about how we've got to deal with China, it looks like it's going to stick, that normally would be enough for a party. But I think with all the shifts on policy and the tariffs are on, tariffs are off, I think Wall Street's starting to get a healthy reticence about both good news and bad news because we didn't react to much of anything yesterday, did we?
No, we really didn't. We just kind of hummed along. It was slightly in the red most of the day. I'm trying to look to see kind of what oil did yesterday overall. And it seems like it was it moving in the wrong direction for sure.
It's got to be the expectations. Number one, now the expectations for a recession movement in our economy are now getting more and more remote, or less and less likely. And the fact that inflation appears to be getting under control elsewhere in the world as well as here, I think it's mostly just the futures trading it up on the grounds that they think that demand will stay up, and they aren't expecting a drop in demand, because the only news on the oil market front that I'm aware of anyway is an increase in output coming out of the core of OPEC down in the Middle East. So there should be downward pressure on it, but there isn't, and it's got to be just economic projections, wouldn't you guess?
It's got to be. I'm looking at the open yesterday was $66.19. And we closed yesterday. Let's see if I can get to the close here. We closed at like 67. No, 67. Yeah, somewhere in that 67 range yesterday. So overnight it must have gone up some more, and because now it's trading down a little bit.
Yeah, it's showing down $1.21 a barrel now, and it's just shy of 67 on my delayed quote. So yeah, it got uncomfortably high there for a while. We start out the morning with more indications that recession is not in deep doo-doo. We got relatively stable first-time unemployment claims, 248,000. That's in the same general zip code it was last week, but kind of confirmation that inflation may not be going down like a rock, but it's definitely getting closer to being tamed. We got a decent consumer price index yesterday. This morning we got a good news out of the producer prices. Wholesale inflation only 0.1% up last month, and they were expecting like double or triple that much. So it looks pretty good, and the core was even a better number over the expectations. So indications are that the Fed is going to start getting some pressure from the administration to drop interest rates again, and now all of a sudden there's almost a case for it, isn't it?
Well, there is. Let's don't forget. Now, it just didn't go up as much as expected. And if we compare it to last month the PPI actually fell. And so it would be nice if we saw, it's nice that it was less than expected, but we really need more negative numbers in that category, that and the CPI both. We need some negative numbers to come across to get that year over year down. because the year over year core is still sitting at 2.7%.
Yeah, we are not making it all the way down to 2% by any way, manner, or form. And remember, some inflation is generally considered good. That's why they target that 2% number. So while it'd be nice to see the full numbers, the top line numbers, and the CPI and the PPI going down, because that would inflect that some of the volatile things like the food and energy prices are getting better under control. I'd be happy to see them latch on to where they are and just get down to 2%, but it's nice to see progress in the right direction, isn't it?
It really is. And let's talk a little bit about real estate for a minute, Dave.
Yeah.
Because real estate, I was reading an article, property values rose year over year 20.3%.
Crap. Whatever happened to this declining housing market they're talking about?
Well, it may be coming because listings are at a 5-year high. Homes are not moving, they're staying on the market longer. People are sitting with a decent interest rate right now because they've owned their homes for a while. And they're saying, look, if I'm going to sell, you got to give me an offer worth it to make me get off this low mortgage. So we're seeing that there's a standoff right now, and the only people that seem to be lowering prices are those that got to move their home because they got to move for a job or some other reason. So we're seeing, more homes stay on the market more than 2 months. More markets, the average is increasing by about 5 days to a week. So it's going to be interesting to see how that plays out, because I know even in my neighborhood out at the country club, we're seeing houses stay on the market a lot longer than what they had in the past.
And something you and I both always remind folks of, that when you hear the extended times on the market and all of that, we were so hot for so long that here in Highlands County, when we get extended times on the market, it basically means we're extending out to what other markets are at a healthy time. But still, if you look at 2 months on the market, which is kind of a smooth average of what it always used to be for a healthy market up north, now we've slowed down to normal. And isn't that a tragedy, huh?
Yeah, exactly. So, the average mortgage rate right now is 6.85%. That's tough. That's a tough amount to have to pay.
Absolutely. And that, like you say, is one of the reasons why, unless you need to move, you generally don't. For those of us with 2.9% mortgages, I got to really need to move before I'm going to unload my place.
Exactly. It's exactly.
Absolutely. Other factors going on, we mentioned oil, you mentioned real estate, other just tidbits that are out there this morning. We've talked about Papa John's in the past. They had all kinds of problems. Their stock went up like a shot yesterday because now they're looking at the notion of a private takeover buyout from a capital deal that would take them off the market completely. That ought to help.
I would think that would help. Yeah.
Yeah. And the Dow futures, when we get to them, they're going to look worse than the others because Boeing had another airplane fall out of the air overnight last night. An Air India jet crashed on takeoff. It was a Boeing. So all of a sudden, all the rebuilding that they've done after their space capsule failure, all their airplane issues they've had, now they're back at the top of the news as having their airplanes fall out of the air again. So their stock is falling like a rock this morning. It doesn't take a lot to make people nervous when you're doing mass transportation like that, does it?
No, and not only Boeing, but then you got GE Aerospace too, because it's their engines that were on those planes. So that's also put pressure on that company as well. So, it is. Boeing just can't catch a break, it doesn't look like.
Absolutely. And 9 times out of 10, it rarely is equipment failure. Normally it boils down to something else. But, first blush out of the thing, oh my Lord, there's an airplane crash, sell Boeing like chiclets. And it ain't necessarily fair, but it's kind of a fact of life on Wall Street. Looking at stock prices and stock reports, Oracle, I understand, is the only major top-line number that we got this morning, right?
It is, and Oracle, they've kind of become a dinosaur in the tech industry, but they had a good quarter. They beat by about 6 cents a share, came in at $1.70. Revenue a little ahead of expectations. They're trading up 8.6% this morning.
Wow. Yeah, and I'm embarrassed because I'm a techie geek to begin with. I'm not even 100% sure where Oracle fits into it. They used to be the biggest software provider for mini computers, but mini computers are kind of like boat anchors these days. I'm glad they're doing well. I just don't know for sure what they do anymore.
They've moved more to the cloud computing space, software as a service, SaaS business. They have a big accounting platform. Um,
Ah,
oh, I forget what the name, NetSuites or something like that. That they kind of, for a lot of companies, it's the next step after QuickBooks. You
okay.
move to NetSuites. I know my son has helped a couple companies he's worked for go from QuickBooks to Oracle NetSuite. So
Okay.
it's kind of the next progression in accounting firms, accounting
I'm
software.
a little bit more educated now. I got to read up and figure out what. Just like I said, you say Oracle, and I think mini computers, and I say, does anybody still have them? Oh, wait, they're at the bottom of the ocean somewhere. Resetting the table, it was a flat day on Wall Street for the blue chips, a modest off day for the more adventurous stocks yesterday. 45 minutes before we open, you got any good news this morning anywhere?
It's hard to find today, Dave. It's hard to find. The Dow is down almost 4/10. S&P 500 is down a quarter. The Nasdaq 100 is down almost a quarter of a percent. The Russell 2000 is down a little over 6/10. So solid red, I would say, this morning before we get started. On the other side, silver up a tad, about 3/10. Gold's up almost 2% this morning, Dave. That's a big jump for them.
Wow. Yeah.
$34.09, $3,409 an ounce. And then crude oil, like I said earlier, is heading down. It's down almost 1.5% this morning, $67.17 a barrel.
Kind of wonder whether or not the rumors get into those. Futures markets can move on a rumor, and that just was an awful big up and down in a hurry overnight for oil. I'm going to have to do some reading. Overseas markets, the Asian rim, it was a mixed bag, but they were driven down by the Hong Kong and the mainland Chinese markets, off by a little bit this morning at the close. European markets are again mixed a little bit. We really don't have a trend anywhere. British markets are down by about 0.75%, and the Italian markets are down by 0.75%. British markets are actually up a little bit. The average European market is down by about 0.33% halfway through their trading day today. It's just kind of a weird day with no real reason for the movements we're seeing. 45 minutes before we open, a little bit of red, and we will find out what goes on tomorrow morning about the same time. I want to figure out how to make my retirement happen, though. How do I find you to make that go according to plan?
Dave, a lot of folks out there have questions about what's happening in the markets, what's it doing to their portfolio, why is my portfolio going down? And that's what we do every day, is help people design that portfolio to make sure that they're getting the most out of it when it comes to retirement. We'd like to give 30 minutes of our time, just a free phone call, just to answer any questions folks may have. And they can call us at 863-382-0037 to schedule that phone call. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM. And where are we streaming live at now?
NewsTalk730am.com.
There we go.
And the app for News Talk 730. Put it on your cell phone. See you tomorrow, my friend. You have a good day, all right?
All right, buddy. You too.
Take care. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Remember, we're here, happy to answer your questions. Just give us a call, 863-382-0037, just for a 30-minute conversation. No obligation at all on your part. Thanks again. Join me tomorrow. Bye now.